Hello everyone. Happy new month to you all out there. I'm so excited to be with you here this morning as we take another fresh new look at the financial market. Good morning to you, good afternoon, and good evening, depending on whichever part of the world you are tuning in from. Well, as usual, we are going to go through our normal routine to confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, I would appreciate that you give me a hi in the comment section, as this will confirm that we are all on the same page. So I would like to see some feedback, please, in the comment section if you can see my screen and you can hear my voice clearly. All right, so let's see what we have here. Okay, so we have 8581. Good morning to you. Thank you very much. 553 7965 says bonjour. All right. Okay, 58674928. Good morning to you. Thank you very much. Hey, Carrie, good morning to you and happy new month to you too. I think with this bunch of feedbacks, I will take this as a confirmation that we are good to go this morning. So it's on this note I welcome you once again to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be taking a fresh new look at the financial market. Well, today is going to be a very important day, considering the double we have in today, that is the last trading day of the week, and of course the first trading day of the new month of September. And of course, days like these are always peculiar with some volatility, as major key players in the market will be reassessing their position, rounding off on their position, and as well strategizing ahead of the new month. So we are going to be taking all these psychological expectations into consideration while we review our current market structure today, and at the same time anticipate the New York session. As usual, in anticipation of today's session, I have conducted a comprehensive analysis on all of the assets on our watch list using simple parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of all of these assets. Well, so far this week, we have been monitoring 4 major assets, including the US All Spot, the USTech100, popularly known as the Nasdaq, the GBPUSD, and of course the XAUUSD, popularly known as the Gold Spot. And in fact, we've been doing pretty well across board since the beginning of the week. So we are going to be going into the details in a moment. Now, for those who are joining us for the first time, you are highly welcome. I'm always excited to have newcomers in the house. Now, you might be asking, what is it that we are doing here? Well, we gather here together on a daily basis in anticipation of the New York session, where we come to review our existing position if we do have any, and of course strategically position ourselves ahead of the New York session, looking out for interesting and simple setups that we can use to guide our decisions. I encourage you to be part of the session till the end, as the more time you spend with us, the better you get in understanding how things works here, and eventually be able to use the information you have gathered to make your own independent trading decisions. So once again, you are highly welcome. Now, with that being said, we shall be diving right into the business for today. And as usual, you know how we do it. The first thing we want to be doing here is to check on the economic calendar. As you all know, these fundamental factors often manifest on the chart in technical patterns and price movements. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns, hereby giving us valuable information and insight that can help us position ourselves ahead, during, and even after the event. So, on the economic calendar, we normally focus on high impact events coming in from the economic dockets that affects the assets on our watch list. So we shall be looking at high impact event from the United States and of course the Japanese economy, right? I think it's the Japanese or the pound or the UK economy, of course. So now on the economic calendar, this has just been wiped out. So I have to re-include it again all over. So here we go. So for today, Friday, September 1, we have a handful of high impact events, all of which are coming in from the United States. Now, in about an hour or two from now, we are going to be witnessing the average hourly earnings for the month of March and for the year on year for the month of August. Now, the previous data and the economist projection for today is more or less of the same thing. So we're still going to be looking forward to what the actual data is going to be on that one. Then simultaneously, we are going to be having the publication of the non-farm payroll. And for those who don't know, the non-farm payroll is released by the U.S. Bureau of Labor Statistics, and it represents the number of new jobs created during the previous month in all non-agricultural businesses in the United States. And of course, a higher reading is considered as positive for the US dollar, while a low reading is considered as negative for the US dollar. And in fact, I would like to state here that we're beginning to see some signs in the market which reveals the anticipation of this event, of course. And in the last week, we can tell that the labor data from the United States hasn't been very promising at all. Remember, we had the ADP employment change. We also had the job openings during the mid-month, which were not very palatable figures. Now, traders scaled back the odds of a financial interest rate hike by the U.S. Federal Reserve this year after U.S. job openings dipped to levels unseen before since the early 2021. Now, everyone is looking forward to the NFP data to see what it's going to be like. Now, if we look at the data that came in last month, it came in at 187,000, remember? And then we have economists projecting 170,000. So you can see that the expectation is below the previous month. So we are going to be looking forward to what the actual data will be. And I can tell you that whatever happens today, the Feds are going to be watching, and whatever happens today is likely going to be affecting the interest rate decision for this month. And one thing that everyone is saying in the market right now is that there is a likelihood of a stall in the interest rate because the data from the labor sector isn't promising at all. Now, we also have the ISM manufacturing PMI, which will be coming up in about 5 hours from now. And for those who don't know, the Institute for Supply Management Manufacturing Index shows business condition in the United States manufacturing sector. And of course, it's a significant indicator of the overall economic condition of the United States. And a result above 50 is considered to be positive, while anything below 50 is considered to be negative. Though in a while now, we have been seeing the figures we have in so far has been below 50, of course. But if we look at the previous data here for the month of July, it came in at 46.4, and the consensus projection for this month is projected to be at 47. So we are going to be looking forward to what the actual data is going to be. Will it be just as expected, below expectation, or even beyond expectation? But one thing we are going to be doing here as technical traders is to dive into the current market structure, looking at it from a technical standpoint, identifying simple structures and patterns that we can use to help us position ourselves ahead of this event. So with that being said here, let's dive right into the business. And as usual, the first asset we are going to be taking on today is going to be the US Oil Spot. Now, on the US Oil Spot, what a phenomenal week we have here on the US Oil Spot, as throughout the course of this week, we have been buying this asset. Now, before we go into the details of what our expectation is looking like here today, I would like us to run through the 1 hour time frame to see how the week started for us and what led to the idea of buying the US All Spot this week. Now, at the beginning of the week, we identified a range where price action was initially confined within, though it was below our key level at the $80 level, but we saw something like price oscillating within the $80 mark and the $79.50 level to give us an insight into the level of indecision at that point in time. And you know how we do it whenever we have a flat range like this. We want to wait patiently for a signal to come, either in the form of the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Of course, we can see that the selling potential never came in at all, as we saw at every point in time price attempt to break out of the resistance line. So we had about 3 attempts before we finally saw the momentum began. So we took advantage of buying above the $80 level. Remember, we also added more positions at the breakout of levels such as the $80.60 level. We also added more at the $81.50 level, and we added one more at the breakout of the $81.80 level during the New York session yesterday. So it has been quite a tremendous week for us all in this community. And if you're still having your buy position running, you must have a minimum of 4 positions running in profit right now. And let's look at what the total of these 4 positions will be giving us right now. So the first position is currently running with about over 400 pips in profit. We have the second position running with over 350 pips in profit. That's a total of 750. Then we have the third position running with about 260 pips in profit. That's close to about 1,000 pips in profit in total. And at the breakout of the structure yesterday, we have about 230 pips. So we have roughly over 1,200 pips on the US All Spot so far this week. So it has been a tremendous week, and I think we can consider the US All Spot as the most profitable asset amongst the instruments we have been monitoring so far this week. And for those who are part of this profitable journey, well done to you. Kudos to you for being on standby to capitalize on this move. Now, the next thing we are going to be doing right now for those who still have a buy position running at this point is to ensure that we move all stop losses to secure this current buy position. And for me personally, the area where I think you want to be moving your stop loss is to this previous structure around the $83.50 level. Anywhere around that area seems most appropriate to secure all buy positions here. Move all stop losses to that area while we wait and see how the market will play out from here. And of course, remember that we normally give enough room for price action to breathe just in case we could witness some retracements before the uptrend continuation happens. Now, with a well-secured position at this juncture in the market, what is going to be our next course of action? Are we going to continue buying the US All Spot today, or is there chances that sellers could come in at any point to take price action to the downside, or probably reflect profit-taking activity in this market? Now, before we go into the details here, I would like us to run through the higher time frame so that we can have an holistic perspective of what is going on there, if we have structures and levels that we can use to guide our trading activities going forward. Now, scaling up into the 4 hours time frame, I would like to refresh our memories as regards to what we identified here at the beginning of the week. Well, the first thing we saw on the 4 hours time frame at the beginning of the week was the fact that price action has been strongly bullish since the month of June. And to further emphasize the strength of the buyers in this market, we were able to connect the series of higher lows here, giving us an ascending trend line to work with. And of course, when price remains above our ascending trend line, we have no business selling that asset. Now, in addition to the ascending trend line is a key level we identified at the $78.50 level. And you will see that since the month of July, we saw how sellers have struggled around that area. So ever since price broke out of this level in the month of July, we saw that every attempt by the sellers to break through to the downside has been met with strong resistance from the buyers. And the same thing also happened during the previous week, as we saw despite the strong bearish momentum that happened last week, we saw how it became difficult for sellers to slice through that area. So as a result of the limitations of sellers within the zone, we were able to identify this area as a demand zone that is likely going to be driving an uptrend continuation. Now, to guide our trading activity this week, we identified a key level at the $80 mark, which we said if price breaks out of the key level, we'll look out for patterns and structures to join the uptrend continuation. And one interesting thing about this key level is the fact that it also shares a confluence with this descending trend line here, where a breakout of course of that descending trend line will be a clear sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. And of course, we saw the breakout at the beginning of the week, price retest structure, and since that moment, we have been buying this asset. Now, as you will see now, price action is gradually approaching a very key level right now, where depending on how price action reacts to this level will determine what our next line of action will be. Now, let's look at what happened here in the month at the beginning of this month. I think the second week of this month, we saw how this area around the $84.30 level was a selling niche during the second week of this month. So we do want to be marking out these levels on our chart. So we have the $84.30 level duly marked out on our chart, as we shall be using this as a reference point to guide our trading activity for today. So now, depending on how price action reacts to this level today will determine what our next line of action will be. So since we have a selling niche around this area, it has a memory for selling power. We shall be careful to see how the market reacts to that area, as if we begin to see some selling pressure resume below this area, well, we might likely be seeing some profit-taking activity, as those who had bought the US oil at a very cheap price this week, let's say around the $80 mark, will want to be thinking of some profit-taking activities, closing in some of their positions ahead as we begin the new month. And if that is going to be the case, then we shall be looking out for ways through which we can sell the US oil spot. Then we shall be looking at either this trend line here for a retest that will incite a trend continuation, and if it happens the price breaks down, then we continue to add more sell position into any of this level that will probably give us signs of a reversal setup. So that is how we are going to be capitalizing on selling opportunities from this current structure. However, if at any point in time today price breaks out of the $84.30 level, retest of structure will be welcoming more buy position. Now, there is a way to which we can manage our positions here. There are two ways to which we can capitalize on buying opportunities above the $84.30 level. Now, the first one is for those who have been part of this profitable journey since the beginning of the week. So if you have been part of us since the beginning of the week and you have been enjoying this bullish momentum, then you are on the profit side of your portfolio on the US oil spot. So we can afford to leverage on the profit we had made so far this week by testing waters above the $84.37 level, placing a buy stop order around that area, and if it doesn't work, then we know that we're still using some of the profit we have made so far to test waters around that area. However, if you are joining us for the first time, then it is very pertinent that you wait for a breakout to happen, scale down to the lower time frame, look out for retest of structure, giving us confirmations to join the uptrend continuation. So this is how we are going to be managing our trade for today on the US oil spot. So Remember how important the $84.30 level is. So we do want to be marking out those levels on our chart, and let's see how the market will be reacting to this level. If you have any questions whatsoever as regards to the current setup, or probably you have you need me to clarify any aspects, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next financial asset. And you can as well use that time to mark out those levels on your chart, as you will be needing them as a reference point to guide your trading activity today. All right. So, in the absence of no questions, I want to assume that we are all on the same page here. So, we shall be moving right into the next financial asset on our watch list. So, the next asset on our watch list today is the USTech 100. Another phenomenal position we have here on the USTech 100, as we have been buying this asset since the beginning of the week. Now, I would like us to go through how the week started, as this will give us a background knowledge of how we got to the point we are right now, and especially for those who are not part of our live session on Monday, Tuesday, and Wednesday, to be able to be on the same page with us. Now, the first thing we observed at the beginning of the week was this range where price action was caught within. We have a confinement of price action within the $15,000 mark and the $14,930. And of course, with our key level situated at the $15,000 area, a breakout of the key level definitely will be welcoming buying ideas. Now, price action breaking out of the resistance line was an opportunity for us to buy, and I told us all on Monday that I already bought, and that for those who had missed out on that opportunity, well, you want to be waiting for a retest of structure, which actually happened. In fact, we had multiple retests of that structure. So if you had missed out on the first one, there was a second, there was a third, fourth, and fifth one before that momentum continued to the upside. And since then, we have been buying this asset, and mind you, we were also able to maximize the potential of this move as we kept on adding more positions as price action broke out levels that we projected earlier as an area to add more positions. So we had a 15,100, we had a 15,325, we also added more at the 15,400, and lastly, yesterday we added one more at the breakout of the 15,490. Now on the USTech 100 too as well, we scooped in a phenomenal amount of profit here the course of this week. I would like us to run through this quickly. The first position here at the $15,000 mark is currently running with over 550 pips in profit. Then we have the second position at the 15,100, which is currently running with about 424 pips. That's roughly 950 pips in total. And then we have the third position here with about 200 pips. That's about 1,100 pips. We also added one more here with about 130, and we also added one more here which is running with about 40 pips in profit at this point. So we have close to about 1,300 pips in total on the USTech 100 for this week. This is a phenomenal move. This has happened. The last time this happened was a very long time ago for us on this asset, and in fact I want to congratulate everyone who has been part of this profitable journey. Now, if you still have a buy position running at this point in time, well, you know how we do it. It is high time we moved all our stop losses to secure the current buy position. And from the look of things, considering today being the first trading day of the month, the last trading day of the week, it comes with a lot of psychological peculiarity as profit-taking activities could come in at any point in time, as you will see that the bullish momentum has begun to reduce in the steam has after the breakout of the 15,400. So it is appropriate that we remove all stop losses, secure the current position, and I'm of the opinion that anywhere below the 15,480 seems most appropriate to lock in this profit. And of course, you know we do want to be giving enough room for price action to breathe. Now, with the situation with a secured buy position at this point, what is going to be our plans as we get prepared for today's trading session? Well, it's been a very strong bullish momentum, and of course, when price still remains above your trend lines, we want to continue to look out for buying opportunities. Now, before we go into the details of what we are going to be looking out for today, I would like us to scale up into the higher time frame. Let's look at things from an holistic standpoint. Let's see if we can see levels that we can use to guide our move going forward. Now, I would like to refresh our memories on what we saw on the daily time frame at the beginning of the week. We saw a simple ascending trend line after identifying and connecting the series of higher lows in this market, which further emphasizes the strength of the buyers. And this has been going on since the beginning of this year, and at no point in time have we seen price action break down this ascending trend line, which further emphasizes how strong the buyers are in this particular market. Now, if we zoom into the current structure, you will see that in the last couple of weeks, despite some selling pressure that began in the month of July, we saw how it became difficult for sellers to break through that trend line, as we saw buy pressure resume around that area and price action is climbing further to the upside. Now, with the situation we have right now, we have something that looks like a reversal pattern springing out of that ascending trend line, and it's in fact looking like a double bottom structure, as you will see here. Now, with this scenario here, are we going to see a situation where price will break out of the previous high to incite an uptrend continuation? Well, time will tell, but we need some structures to guide our move. Now, scaling down into the 4 hours time frame, we have a couple of levels, I think. And of course, we have the 15,400 level, which has finally been broken to the upside. Remember, this level had been a strong selling niche since the beginning of the month of August. So we have seen how this level was a strong selling niche throughout the month of August before it was broken during the midweek of this week, of course. And right now, price is continuing to the upside. So at this point in time, we are at a crucial moment where I'm looking forward to a further breakout to welcome more buying opportunities. Now, if we go into the past here, you will see, let's go to as far back as the beginning of this month. We can see we have a level right here at the 15,530 level. So we do want to be marking that level out on our chart right now, as we shall be using it as a reference point to guide our trading activity for today. So we have the 15,530. So do mark it out on your chart. So price is back into that area. And if we go to the beginning of last month, I never knew we are out of August now. So we saw the breakdown of the structure here. We saw price action retest that structure here to incite selling opportunities. And right now, price is back into that level. And in fact, in the last 24 hours, we have been noticing some selling pressure around that area. Will this area again turn out to be a strong selling niche to incite some bearish momentum here again? Or is price going to break out of this level to incite another wave of bullish momentum? So you will agree with me that we are at a crucial point in the market, and considering the fact that we are on the first trading day of the month, let's see how market participants will be reacting to this level. So our center of focus for today's trading session is the 15,530 and depending on how price reacts to this level will determine what we will do. So if selling pressure persists below the structure, then we shall be looking out for patterns on our lower time frame to be part of a retracement move. I will consider it to be a retracement move, probably into this trend line to incite an uptrend continuation. And if this trend line is broken, then we shall be looking out for more selling opportunities. Then we shall be considering the next trend line here, which is the ascending trend line we identified on the higher time frame for probably an uptrend continuation. But if it so happens the price breaks out of the 15,530 level, then we shall be looking out for more buying opportunities here. So now let's scale down into the 1 hour time frame. Let's see how the market has been reacting to this level in the last 24 hours. Now when we scale down into the 1 hour time frame, things becomes a little bit more clearer. So we have the 15,530 duly marked out. So this is where we shall be positioning ourselves to capitalize on more buying opportunity if price breaks out of that level. So we shall be, now there are two ways to this for those who have been with us. Remember, if you are profitable so far this week, you have been part of the profitable journey since the beginning of the weeks, then definitely you can afford to leverage on some of the profits you have made so far this week to test waters above that level. So having a buy stop order around that area is a very reasonable idea at this point. And in fact, if price does not move as expected and we are taking out, we are still going to be on the positive side of our portfolio. However, in as much as we're looking out for buying opportunities above the 15,530, we cannot ignore the potentials of sellers. And if we consider how strong this momentum has been since the beginning of the week, those who had bought this USTech100 at a very cheap price might likely be considering some reassessment of their portfolio by closing in some of their positions to take in some profits as the new month began. And if this is going to be the case, how do we intend to capitalize on a bearish opportunity here? What do we want to see on the chart that will make us change our bias from bullish to bearish? Now, if you look at the structure closely and looking at how price action has been reacting since the beginning of the second half of this week, you will see that price action, though the momentum has reduced, look at what we have here. If you compare how price action has been gaining momentum here, you will see it has gradually reduced with time, and the continuous selling pressure around the 15,530 could incite scenarios where reversal moves could happen to incite a sell-off. So we have higher lows around here, and you know when we have higher lows, we do want to be connecting the series of higher lows to give us a trend line to work with. Now with our higher lows marked out on this chart, so I will be doing some readjustments when I bring back our candle chart so I can capture most of the pivot lows on this chart. Hold on a second. Beautiful. So we have a trend line to work with for today. Now what we are going to be doing here that will make us want to sell the USTech100 today is for us to see that trend line breached. If the trend line is broken to the downside, then we will start considering selling the USTech100, and there is a likelihood that we could be seeing some profit taking activity that could send price crashing to the downside. And remember, we are looking forward to the NFP data today, which of course also has a potential of bringing in some volatility into this market. So I want to see price break down the trend line, and continue selling pressure below the structure will definitely be welcoming selling opportunities. So in that regard, I will be positioning myself below the 15,490 to capitalize on a downtrend movement. So that is where I will be thinking of selling, as if price breaks down the 15,490, it would have broken down the ascending trend line, and of course selling pressure below that structure will be all we need to capitalize on a sell move. So this is how we are going to be managing our positions on the USTech100 for today's trading session. I do hope you marked out these levels on your chart, as we shall be needing them as a reference point to guide our trading activities for today. So let's see how things will play out from this current structure. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move right in to the next financial asset on our watch list. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the next asset on our watch list. So the next assets we are going to be looking at on our watch list is the GBP USD, and in fact we've been doing pretty well since the beginning of the week, though the week started with a very choppy scenario as we saw price action was range bound for most of the first half of the week before we begin to see some bullish traction, some traction in favor of the buyers. Now let's run through how the week started so that we can have a background knowledge of what is really going on here. Now, at the beginning of the week, we affirmed that there was some indecision in the market as we saw price confined between our key level for the week at the 1.260 and of course the 1.25790, giving us an insight into the level of indecision at that point in time. And in fact, the appearance of this engulfing bearish candle made us to consider selling the GBP USD at the beginning of the. Remember, we saw this bearish engulfing candle, which gave us a sign that we might likely be seeing some selling opportunities. So the breakdown of the 1.25790 triggered a sell position for us at the beginning of the week, but unfortunately, we were taken out of that position in a loss before this bullish momentum began, breaking out of our key level at the 1.260 level, and since that moment we have been buying this asset. And remember, we went on to maximize the potential of this bullish move by adding more positions to our existing trade. We had levels like the 1.263, we had levels like the 1.265, and of course the 1.267 as we milked that bullish momentum all the way to the upside. And in fact, let's see how many pips that one moved before the sellers came into this market. Let's see. We had this. Okay, the first position here moved about 140 pips, as you will see, while the second position here moved about 110. That's about 250 pips thereabout, and we saw this one move about 9,500 pips, giving about 300 pips, and we had this one move about 70. So we had about over 300 pips on the GBP USD during the first half of the week, which wasn't bad at all to start the week with. Then on Thursday, that was yesterday, we anticipated the breakdown of the structure. I think the breakdown had already happened yesterday before the live session, and I told us that for those who had missed out on that opportunity, that we shall hold on to see if the market will come back to retest to inside that move to the downside, which of course never happened. Now, for those who had sell position here yesterday, I do hope that you moved your stop losses, and if you had done that, you must be taken out of that trade right now. Now, heading into the New York session today, what is going to be our plans on the GBP USD? Especially after considering the strong momentum that began this week, the bullish momentum, is it going to be the end of the bearish momentum? Which, of course, I told us all yesterday, I am seeing this bearish momentum as a retracement of this impulsive move. So are we at the end of this retracement phase to incite an uptrend continuation? Or are there chances that this trend line will be broken to the downside to incite a bearish momentum? Now, let's look at this in detail. Now, before I do, I would like to delete some of these structures here which are no longer relevant so that we can have a clean chart to work with. All right, so we have the situation right here. Now, if you look at what has been going on since the midweek, you will see that price action had consistently found lower highs, which is a sign that sellers are gradually gaining momentum. And of course, I made mention that this bearish momentum may likely be the retracement of that impulsive bullish move that started this week. And what we are going to be looking out for as technical traders here is to wait and see how far this retracement phase will go before the second leg of the bullish momentum will begin. Now, if you look at the way things are going, despite the lower highs on this chart that resulted in this bearish trend line, you will see that price action is yet to find a lower low to confirm the strength of the sellers in this market. As you will see here that since the New York session yesterday, we have noticed that sellers are continue to struggle around the 1.2660 and the 1.265 area. You will see that at every point in time price comes into that level, we saw how buyers jumped in to negate all sellers' attempts. And this has been very consistent in the last 24 hours to give us clues that we might likely be seeing the breakout of that descending trend line to inside an uptrend continuation. Now, if we take a step further to look at what the transition of price action is gradually evolving into, you will see that following this impulsive move to the downside, we had a sharp rejection of the 1.265. Price came back into this level. We saw the inability of price action to break down and close below the previous low as a sign that we might likely be seeing a reversal pattern in the form of a double bottom structure. And you know how we do it. Whenever we identify such patterns on the chart, the next thing we want to be doing is to identify the neckline, which I'll be serving as a yardstick to validate the potency of that reversal pattern. And of course, we have something within the 1.267 and the 1.26750 area to guide the momentum upward. Now we already have a breakout of the 1.267, as you will see a very strong engulfing bullish candle springing out of that structure, and price action appeared to come back to retest the structure, and we have been noticing some buy pressure around this area. So it makes quite a lot of sense that we look out for buying opportunities here, and if price action goes on to break out of that descending trend line, then this will be a good signal that the trend line may no longer have the capacity to continue to negate that bullish attempt, giving us another suitable opportunity to add more position to our existing trade. And in fact, I have the 1.26880 to help us capitalize on more buying opportunities in this market. So if price breaks out of that level, we had more positions, and mind you, we still have more levels to maximize the potential of this uptrend continuation. So we have the 1.27120, and of course we have the 1.27450 level to capitalize on the uptrend continuation. So let's be on standby anywhere above the 1.267 and the 1.26880 to capitalize on an uptrend continuation. However, in as much as we're looking out for buying opportunity around this area, we still cannot ignore the potentials of sellers. Anything could happen in this market, and for the fact that price action still remains below the descending trend line, let's see what could happen on this chart that will make us negate the idea of buying and get ready to sell the GBPUSD. Now, one of the criteria we are going to be using here today is that ascending trend line we spotted during the midweek. Now, remember, since last week Friday, you will notice how price has consistently found higher lows in this market, hereby giving us an ascending trend line to work with. Now, as long as price remains above the ascending trend line, you know we continue to look out for buying opportunity. But if at any point in time today price action breaches this ascending trend line, then we might likely be seeing a momentum shift begin. Now, to sell the GBPUSD today, I want to see price break down that ascending trend line. Remember, we are not getting too excited here, as we will need some confirmations to happen before we jump into a sell position. Remember, we are within a very strong bullish momentum, and it makes quite a lot of sense that we wait for confirmations to happen, as the breakdown here could turn out to be a false breakout, and we don't want to get ourselves caught up in that kind of mess. So what we are going to be looking at here is breakdown of structure. First of all, scale down to your lower time frame. It could be the 5, the 10, or 15 minutes time frame to look out for signs that buyers are finding it difficult to climb back above the ascending trend line. And of course, this will reflect on the chart as price retesting both the ascending trend line and the bearish trend line here to incite selling pressure to push price to the downside. And if that happens, we have multiple levels here that will guide more trading opportunities if price continue to nosedive to the downside. So we have the 1.263, the 1.265, and of course the 1.2600 level, our key level here, as yardstick to guide more selling opportunities if price action does break down these levels. So this is how we are going to be managing our position today on the GBPUSD. And of course, from what I have said so far, you would agree with me how important this ascending trend line is going to be for us today. So as long as price remains above the ascending trend line, we continue to look out for buying opportunities, at the same time feel comfortable in our buy position. And we are not selling unless this trend line is broken to the downside. So let's mark these levels out on our chart, as we shall be needing them as a reference point to guide our trading activities for today. So if you have any questions whatsoever as regards the current setup, feel free to let me know in the comment section. And of course, you do want to be marking out those levels on your chart right now, as you will be needing them as a reference point to guide your independent trading decisions. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move right into the last financial assets for today. All right, everyone. It appears there are no questions, so I would like to take that as a confirmation that we are all on the same page, and all I've said so far has been quite comprehensive enough. So with that being said, let's dive right into the last financial asset on our watch list. So the next financial asset on our watch list for today is the XAUUSD, my favorite, popularly known as the gold spot. And in fact, we have a phenomenal position on the XAUUSD so far this week, as we have been buying this asset since the beginning of the week, hereby scoping close to over 500 pips on this asset since the beginning of the week. Now let's run through what really happened at the beginning of the week and what led to the idea of us buying this asset. Now, at the beginning of the week, the first thing we observed was this bearish trend line after connecting the series of lower highs since last week Thursday. We had a trend line here, and then besides the trend line was a range which was plotted between the $1,917.60 level and the $1,914.50 area, to emphasize the level of indecision there. Then there was one thing we observed within that range that's incited the idea of selling. Now remember, price action was below our descending trend line at the beginning of the week, and coupled with the fact that we had sharp rejections of the zone here, we were looking forward to selling the XAUUSD if a breakdown of the $1,914.50 level happens. And in fact, we saw price break down that structure prior to the live session on Monday. I told us all I was in a sell position at that point, but unfortunately the appearance of buy pressure around this area, as we saw sellers struggle for about 4, 5, 6 hours around that area. Then at this point, I made mention on Monday that it is likely that buyers are going to be breaking out of that descending trend line. And with that observation, we decided to position ourselves above the 1,916, which of course lines up with the descending trend line here to gets us prepared for buying opportunities. And in fact, we saw our price broke out of that structure with a significant engulfing bullish candle. And in fact, if you had missed out on that opportunity, the market was so kind, it came back, retest structure, and since that moment, we have been buying the XAUUSD. And in fact, we had multiple entries. Remember, we had the 1924 level, we had the 1926 area, which we also added more position. In fact, we rode the move all the way to the upside here. Now, during our live session yesterday, we capitalized on some selling potential here. As you will see, we rode the move all the way to the downside, and that moved about 55 pips thereabout before this bullish momentum came in. And of course, if you had followed our instruction in this community, as we say that whenever price moves significantly well in our favor, we move our stop losses accordingly to secure the position, then definitely you must have been out of that sell position right now. Now, in preparation for the New York session today, I already have a buy position triggered, and I will be explaining to you in a moment why I bought at that point. Now, if you consider the sell bearish momentum we witnessed here yesterday, remember we saw that as soon as price got into the zone right there on Wednesday, we begin to see some selling pressure resume. And in fact, buyers were finding it difficult to break out of that area. And as a result of that, we saw price action transitions into lower highs. And when we connected the series of lower highs here, we had a descending trend line to work with. Now, in addition to the scenario here, despite the lower highs in this market, just like what we saw on the GBPUSD, we saw how it became difficult for sellers to find new low. Now, as soon as price action got into the zone between the 1939 and the 1938 level, we saw how buying pressure resumed around that area. In fact, sellers struggled at every point in time price comes into that zone. And as you will see, since the New York session yesterday, despite our sell position, we saw how buyers continue to negate all attempt by the sellers to break through that level. And for me at this point in time, it's a clear sign that we are likely going to be seeing the breakout of that descending trend line to further emphasize the strength of the buyers in this particular market. And coupled with the data coming in from the United States in this week, during the course of the week, remember the labor data were not palatable at all. And as a result of this, if the data are not too good, the likelihood of an interest rate hike becomes minimal. And when there is no interest rate hike, then the yield and return will have reduced, and most importantly, participants in the market, because of the unattractiveness of the dollar at this point in time, will want to be running into the safe haven such as gold, metal, as we have here. And the appearance of buy pressure around the zone for me is a sign that we might likely be witnessing some traction in favor of the gold metal ahead of the NFP data. Now, with the scenario we have here, looking at the structure, I have something that looks like a reversal pattern right now, has the inability of price action to break out of this zone as transition into something like this with a neckline that will help us validate this reversal pattern located between the 1944 and the 1943, and of course a breakout of the zone is all we need to validate this reversal pattern. Now, for those who are profitable so far this week, you can afford to join anywhere above the 1943 right now, as you will be leveraging on the profit you had made so far this week. So even if price does not go as expected, we'll still be on the positive side of our portfolio. However, for those who are joining for the first time, or if you are coming into this position from a clean slate, then I will be advising that you wait for some confirmations to happen, like a breakout retest of structure before jumping into that position. But from what we have here in the last 2 to 3 hours, it's quite clear that we already have a breakout and retest of structure, so it's quite reasonable that we look out for buying opportunities above this area. So in fact, I have multiple levels here where we can use to capitalize on this uptrend continuation. So we have the 1944 level, as you will see here. We have the $1,946.30 level, And of course, we have the 1949 level, which happens to be the highest point where price action has been for this week to add more position to our existing trade. So let's see how the market will play out from the structure. I'm of the opinion that things are looking very, very bullish at this point, and in fact, considering this breakout of this descending trend line, for me, it's another good sign that we are likely going to be going bullish. Now, there are tendencies of some retracement phase to happen. You know, from a technical standpoint, when price breaks out of a trend line like this, there are chances that price could come back to retest the trend line in anticipation of an uptrend continuation. So you want your stop losses to be anywhere below this trend line so that it can capture a potential retest of that structure before the uptrend happens. So there are possibilities of that to happen here. So let's keep that in mind while we continue to monitor price action. So these are my views here as regards buying the XAUUSD from this current structure. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community. We also want to keep tabs with the opposite direction too as well. So in as much as we're looking out for buyers, let us consider the potentials of sellers in this market. What is it that we are going to see on this chart that will make us want to start considering selling and negates the idea of buying this asset? Well, personally, for me to sell the XAUUSD today, I would rather want to see price action take out this demand zone here between the 1939 and the 1938. So a slice through of the zone here will be a beautiful signal that we are likely going to be seeing a momentum shift. But I doubt if this happens today, but if it does happen, we want to be on standby to capitalize on that move. So a breakdown, retest of structure, it could be the retest of the 1938, or it could come to as far as retesting the trend line, where continued selling pressure will be all we need to be part of a downtrend continuation. So that is how I'm going to be selling here. If the breakdown does not happen, there is no way I want to be considering selling, considering our buyers are very, very strong around this area. So these are my views here on the XAUUSD. Things are looking very bullish at this point in time. I will continue to hold on to a bullish bias unless the market structure states otherwise by breaking down that 1939, 1938 zone. So these are my views here today for today, and you want to be marking out these levels on your chart as you want to be using them as a reference point to guide your independent trading decisions. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we draw the curtain for today. And you can as well use that time to mark out those levels on your chart as you will be needing them as a reference point to guide your trading activity. All right. So in the absence of no questions, I'm very grateful to be with you here this morning, and I want to assume that we're all on the same page here. And in fact, we were able to take on 4 financial assets this week, which we have been monitoring so far. And in fact, we've been doing pretty well across board on these assets. So we treated the USOILSPOT, the USTech100, popularly known as the Nasdaq. We treated the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And in fact, for those who are part of this profitable journey across board, well done to you for being on standby, and congratulations for being able to capitalize on these moves. Now that we are heading to the New York session today, I'm very confident that we are able to simulate all the potential trading opportunities that could likely happen on all of the assets on our watch list, and I do hope you are able to mark out those levels that we are going to be using as a reference point to guide our independent trading decisions. It's on this note I want to wish us all the best of luck today. And for those who are joining us for the first time, I didn't forget you guys. I do hope you are able to get one or two things from what we discussed here today. But trust me, I encourage you to be part of our subsequent sessions, as the more time you spend with us, the better you get in understanding how this works and eventually be able to use the information you have gathered here to make your own independent trading decision. So I look forward to seeing more of you next week, Monday, same time, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review what we are going to be looking out for in the new week. Do have a wonderful evening, everyone. Have a blissful weekend too as well. And I look forward to seeing you on Monday morning right here on the Extra Speed Live. Good evening, everyone, and bye-bye.